All right, so we're back at it again. Welcome to Coach Steele's Finance Training, where we are talking about taxes. We're talking about tax tips, and we're going to see if this Facebook Live is kicking in properly. If it isn't, that's fine. Then what I'll need you to do is go to my YouTube channel, Coach Steele's Finance Training on YouTube, and there you can find the live there as well. So either way, we're going to get this thing done talking about tax preparation. All right, let me check YouTube. Normally we don't have these technical difficulties. Let's see. Let's see if it's working now. Okay, I think it's working now, and we'll try to move forward from there talking about these taxes. Let's see what we have. Testing 1 2, testing 1 2. All right, so we're here talking about, of course, financial literacy here on Coach Steele's Finance Training. So make sure that you subscribe and also make sure that you share this feed as well. Hello to everyone again. Thank you for your patience as we get this thing back up and running again. And I'm pretty sure that, okay, we're good to go on Facebook as well. We got on YouTube and Facebook. Appreciate your patience as we dealt with the technical difficulties that comes with going live sometimes. You know, having to be able to go and face those adversities and the different things that come with going live versus doing a pre-recorded video. But I like going live, talking to the audience in real time about these things and working through financial literacy together. So once again, welcome to Coach Steele's Finance Training. Happy to have you on this morning. Good morning, Felicia Richardson. Happy to have you on this morning. And so it'll be very interesting because depending on what your structure looks like, your different entities, how you do taxes, whether you're individual filing, whether you're married jointly, whether it's separate, whether it's different business entities you have, sole proprietorships, LLCs, all these different things that you deal with, it can be very complicated sometimes when it comes to taxes. And I'll read off again what I said earlier before I got messed up with the technology hiccups. And I talked about doing your own research. It's important that as we talk about different content, it's intended and used and must be used for informational purposes only. And it's very important to do your own analysis before making any financial decisions or tax decisions or investment decisions based on your own personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find and wish to rely upon, whether it's for the purposes of making an investment, whether it's for the purposes of doing your taxes, making financial decisions, or otherwise. So always do your own research as we talk about these things. What may apply for one person will not apply for all. Sometimes people use the phrase, what's good for the, goose is good for the gander or whatever it is. Yeah, that doesn't work with taxes. But anyway, let's talk about financial literacy on this morning. As you're tuning in and listening in, ladies and gentlemen, make sure if you're on Facebook, you can share this live feed with those that are around you. Everybody needs help or guidance when it comes to taxes. And so that's what we're talking about on today. And of course, we know preparing taxes can be seen as a daunting task. Sometimes it can be frustrating. Sometimes it can be nerve-wracking. Am I going to have to owe Uncle Sam? Is the IRS going to take money from me? Did I do enough with my taxes? Did I have enough taken out? Did I, fill out my, brain fart. But did I have, put my numbers in correctly so that everything works out properly? And of course, what forms do I need? What do I need to have prepared? So let's talk a little bit about all of that on today. And so when we look at that, how preparing for taxes can seem like a daunting task, But I will say this, if you have a better structural approach, it can become much more manageable. And so not only this tax season, but for tax seasons to come, I want to talk about what we can do to help us take step-by-step guides to prepare effectively for our taxes. So that's what we're going to do on today, ladies and gentlemen, as we talk about tax preparation. We got a lot of people in the building on today, so I thank you for sharing the live. And also, like I always tell everyone, speak to me when you come in the room. I want to say hello to you. And I just want to thank you and appreciate you for supporting. We're growing. Of course, we're past 400 subscribers on YouTube. So thank you for everyone who went to the YouTube channel, Coach Steele's Finance Training, and subscribed on YouTube. It didn't cost you anything. So it was nothing but love when you did that. And I appreciate that because you didn't have to do it. So you went out of your way to support what I have going on. So when it comes to taxes, when it comes to preparing for taxes, and ladies and gentlemen, one of the best things and first things you could do that we'll talk about is gathering documentation. That's number one. So let's look at number one, which is gathering documentation. We want to make sure that we gather documents. That's numero uno. And when we talk about gathering documents, some of the initial documents that you can gather, if you need to make a list, one would be W-2s. If you have any employment income, you want to make sure you gather your W-2s. You get your W-2s from your job, or whether you print them off online, you want to gather those W-2 documents. Some of you may be doing freelance work, contractors, so you may have a 1099. And so you want to make sure that you have that 1099 as well. Some of you may get W-2s and 1099s. Regardless, you want to get both. So those are some of the documents you want. Also, you may get 1099s from dividends. You may get it from interest or other income. And so anybody who's been listening to me about getting a high yield interest savings account, you might have made some interest this past year. And of course, if you need access, if you want to learn more and set up a high yield interest savings account, usually on YouTube in my description box, I have a link in there that will tell you about a bank that you can set up a high yield interest savings account. And if you put $50 in there within the first 14 days, you'll get $25. But anyway, so if you have a high yield interest savings account, you probably made some interest. So that is capital gains, and we're supposed to pay taxes on that unless there's a way to write it off, of course. So you may have made some dividends. I've talked about investing in dividend stock. So you may have to pay some taxes on those dividends. So we want to collect all 1099s. And if you have any partnerships, S Corps, or states, you may have some K1s K1 that you need to get together as well. So first things first, good morning to you, Timothy Scott and Cheryl Ware. Happy to have you on this morning. We want to get income documents. That's number one. The next thing we want to get, and so we'll continue on with documents, is deduction documents. So number one, we're gathering documents. That's the first thing, but there's different documents together. We want the income documents and we want the deduction documents. Of course, we all like that. Any documents that can help us deduct from the overall amount. And what are some of those deduction documents, ladies and gentlemen? Well, if you own a property, if you own a home, you want to get your mortgage interest statement, and that's going to be a 1098. So if you got anything in the mail, whether you're a new homeowner, if you've been a homeowner for a while, you want to get a 1098. Sometimes all the time, the mortgage company should mail that stuff out to you. They should mail those 1098s to you if you paid any interest on your mortgage. If you had a loan, amortized loan on your mortgage, on your house, you should have a 1098. And so you can use that interest that you paid. You should be able to use that as you go through to do your taxes as well. So make sure you find all of that. If you can't find it in the mail, then go online where you pay your mortgage and go to documents, and you should be able to find that there as well to help you out. So we're gathering documents. We got our income documents. We got our deduction documents, property tax receipts. If you paid property taxes, make sure you get those receipts for yourself paying property taxes. Also, charitable donations. If you've given to a nonprofit, a 501c3, make sure you gather those documents as well. If you attend a church, if you're part of a ministry, or you're constantly tithing or giving to a ministry, make sure you go to that ministry or whatever app or whatever platform that ministry has for you. Find that information and get your charitable donation receipts as well. Those might be something that you could potentially write off as well. Once again, do your own research, because your situation may be different, especially when we talk about standard deduction versus itemized deductions and all of that detailed stuff. But remember what I said in the beginning, do your own research, get with your CPA, your certified tax professional, or a tax professional. Now, we do want to get those charitable donations and medical expenses. You never know. You may be able to itemize those medical expenses as well. So whether it's your children, whether it's you, all the medical expenses for the house, make sure you gather all of that. And so I remember years ago, I didn't know that, and I found out. I went to Kroger, CVS, anywhere I had to pay for a subscription. They have a list of that stuff. All your transactions, they can print all that stuff out so you can add it up. So make sure you go to those different places, those doctors' offices, wherever, get that documents, just in case if it does make sense for you to itemize everything. And also education-related expenses. And so I remember that was another cool thing I love being able to do, was if I was in college, I could write off a lot of those educated-related expenses. Also, more documents that we need, investment-related documents, whether it's brokerage statements, records of stocks, and many people that listen in on Coach Steele's finance training. Good morning to you. You want to get records of your cryptocurrency transactions, especially if you made capital gains as well. Another one that I used to like getting documents was my childcare expense. Oh, and I'm sure childcare expenses have gone up since I had 3 kids in daycare. But make sure you get with that daycare or that person who does daycare for you, whether it's an individual or a company, and get that yearly total of your childcare expenses or any alimony payments or student loan interest as well. That should be on a form 1098E. So that's number one. That is a lot of documents that we need to start gathering, right? Next, number two. Let's see what number 2 is on the list. Good morning to you, Shauna. We are talking about getting these taxes right. So we don't have to give Uncle Sam as much money. And we must understand, when it comes to financial literacy, guys, that a lot of people are able to grow wealth at a faster rate because they have found creative ways to not give as much taxes and money back to Uncle Sam. They have found a way to not have to pay as much in taxes, which allows them to grow wealth at a faster pace. So number 2, we want to organize our financial records. That's number 2. 1, we need to, what's number 1, ladies and gentlemen? Gather documents. Number 2, we need to organize financial records. What does that mean? Keep all relevant receipts, statements, and records sorted by category. A filing system, whether it's physical or digital. Digital is probably the best, but that will help you with tracking everything. And so keeping a good filing system will save you, because I've tried to keep like receipts and folders and different things like that. And then the receipts can start fading over time, and then they're hard to read. So if you can take a picture, save it digitally, whether it's in a folder on your laptop or whatever device, then that helps out so much better. But keeping relevant receipts and statements, whether it's from your income, whether it's for deductions, or whether it's for credits, putting all of that stuff to be digital will save you a lot of headache and time and energy. So that's number 2, organize financial records whether it's physical or whether it's digital. All right, number 3, ladies and gentlemen, as we go through this, is review tax law changes. Now, once again, like I told you all in the beginning, to make sure that you research, do your own homework concerning your personal situation, it's important that not only the person who does your taxes, but also let them explain to you what the tax law changes are and how they affect you. So number 3, review tax law changes. And this is important because we just had an election, and so there's been a change of guard. So quite naturally, we can expect there's going to be changes when it comes to the taxes, whether it's this year or the next year. So if you're tuning in this morning on Coach Steele's Finance Training, we are talking about tax tips and some of the best things we can do to prepare for tax season. And, you know, some people get excited about getting money back. Some people get excited about the fact that they don't have to get any money back. Everyone has these different wavelengths that they are on when it comes to taxes. But number 3 is review tax law changes. Get with your tax professional, get with your CPA, and find out what the changes are and how they can benefit you or how they affect you. Like, are you in a new tax bracket? Are you going to have to pay more taxes? Are you going to have to pay less in taxes? The changes to the standard deductions, or the itemized deduction rules. Have the standard deductions increased because of inflation? Updates on tax credits, whether it's child tax credit, education credits. You can be very strategic as much as you want to and be proactive when it comes to taxes and knowing what to expect. And so what we have to do is we have to be proactive when it comes to taxes, because if you're reacting, then you didn't give yourself a chance. You didn't give yourself a dog in the fight to be able to put more money back into your pocket and have less going out. Now, another important thing, number 4, that we'll talk about is decide how to file. Now, I'm going to get to number 4 when it talks about decide how to file. That's our number 4 on today, is decide how to file. Thank you, Yvette, for putting the steps in there that I'm going through step by step, 1 through 4. Let me see if I can go back. Oh boy, I might have messed something up, guys, again. Let's see if I can get this together. Okay, let's see. Oh boy. So decide how to file. That's the next thing. And let's see here. Before I get to decide how to file, I want you to understand, you have to get with your CPA. I'll go ahead and jump on that. Number 4, you have to find out what best suits you and your household on how you're going to file. And depending on how you file also comes with a different set of rules and a different amounts of numbers and things like that. All these different variables come into play depending on how you're going to do that. But learning those rules are so important. Learning the laws are important. I remember when one year I got super excited because, as many of you know who listen in, I have some real estate. And so I'm like, I got a lot of write-offs on this real estate this year because of different things that had happened with my real estate portfolio. But even when it comes to real estate, that's passive income when you have long-term rental properties, right? So that's passive income. But there's write-offs that you're allotted. But if you just have passive income, but you're not recognized as a real estate professional, then that changes the whole game. It's 2 different dynamics, 2 different worlds, right? So I was in the part of the world where I had a certain amount of write-offs when it came to this passive income. And for a long time, I was able to write off the losses on passive income against my W-2 income, right? But once you get to a certain point, you can no longer write off those losses against your W-2 income like you once used to. But once again, those are things that are very, very important, because what if you got $20,000 to $25,000 worth of losses you thought you were going to write off against your W-2 income, but now you can't. So now you got to pay taxes on that W-2 income that you thought you wouldn't have to. So it can cause a different dynamic. So learn these laws and rules before you get hit. And I'm sure, many people who are listening in have gotten hit by the IRS with a pleasant surprise or unpleasant surprise with having to owe or something like that in taxes. So anyway, that is my 2 cents about that. But once again, decide how you're going to file and figure out what's the best way to file for you and your situation in your household. Let's see here. Next, what I'm going to cover, number 5, is maximize deductions and credits. And so, guys, as you're tuning in on today, let me make sure I put that in here, because I'm putting the notes in for the YouTube channel as well, as someone's writing them in for the Facebook channel. But we want to maximize our deductions and credits. And so as you're listening in on today, have you ever had deductions or credits that you were able to use on your taxes? If you've ever had any deductions or credits you were able to use on your taxes, write them in the comment section on Facebook and in the chat section on YouTube. You might be able to bring some awareness to someone else of something that they may have forgotten. So what are some of the deductions or credits you were able to use on your taxes? Write them in the comment section. What are some of those deductions or credits? What are some of your deductions or credits that you've been able to write off on your taxes? All right, we got one person, Mr. Tony Sherman, said he was able to write off his solar panel. Solar panel credits. So that's something you need to look at. And I call that some of that go green area. Sometimes depending on what upgrades that you have done with your house, whether it's the windows, whether it's the type of HVAC system, or whether it's solar panels, some of the things you buy and the technology that you upgrade to, some of that stuff you're able to write off on your taxes. So you definitely want to do some research and find out, because that may end up in turn helping you pay for whatever that upgrade was. So that's one of the things that we have here. Anybody else have any examples of some things that they were able to use as deductions or credits? Is Mr. Sherman the only person that ever got a deduction or credit? Sometimes people may use contributions to their HSA or other tax advantage accounts that could reduce their taxable income. So those are some of the things that people do. And let's see, maximize deductions and credits. So find out what you can use for deductions and credits. I'm going to go ahead to number 6 as well. Let's see here. Number 6 is prepare for tax payments. Woo! Lord have mercy. So this will help, especially people who are maybe 1099, or let's say you have your own business. Some of the things you can do is prepare for tax payments. What does that mean? There are many people who are going to have to pay taxes based on how much money they've made, or however their tax setup is. Or they may not have to, but they're preparing to, just in case. And so some people may pay taxes quarterly in advance. They may pay ahead of time. That way they have the money set to the side so they don't get caught off guard. And some people like doing that for a number of reasons, like I just mentioned. And there are some people who they're happy if they don't get a refund check, but they also don't owe. Why is that? And so everyone has different mentalities. Some people get excited about a refund because they say, oh, I got money back from the government, or I got money back from the IRS, Uncle Sam, whatever you refer to it as. And some people view that as, well, you shouldn't be excited about it because they held your money for that long, for a whole year, or whatever the amount of time frame is. And now they're finally giving it back to you, when you could have set up your taxes in a way where you never had to give them all of that. You don't owe them anything. They don't owe you anything. And you could have used that money throughout the year to build up wealth, to work to your benefit, to pay off debt, you name it. So everyone has different philosophies and views when it comes to taxes. And you have to do what gives you peace of mind and what strategically is the best financial move for you and your level of discipline. Of course, I don't want to owe Uncle Sam anything, and I also don't want to give. I don't want. I don't want to have to give Uncle Sam anything, and I'm happy with if we break even, 0-0, whatever the case may be. So when it comes to that, prepare for your tax payment. So if you know that you usually are going to have to owe, then start setting that money to the side in advance. And once again, if you got to set it to the side, then you might as well allow it to work for you. So go in my description box on YouTube or Facebook and click on that high yield interest savings account link and set up a high yield interest savings account link. So while you set your money to the side, it can work for you and you can make some money. Mr. Sherman says, no refund, no payment because I don't give government interest-free loan. And that's what I'm talking about. We don't want to give the government interest-free loans. So when you're strategic, you can keep that money in your pocket throughout the year and do what's best for you. That is number 6. All right, we're almost done, ladies and gentlemen. Let's get to number 7. Number 7 is verify and file. Double check your return for accuracy. Verify. What are some of the things you need to verify, especially if you have children? When I talk about verify everything, then file, what are some of those things that you need to verify? We're talking about social security number. You want to make sure you got the right social security number, the right addresses. You want to verify everything. Another thing you want to make sure, especially if you're supposed to get a refund, you want to make sure that that routing number and that account number is correct, or that address, however you're going to receive that payment. You want to make sure all of that is accurate on there as well as you're going through. Another important thing, and I want to talk about this too, if you end up getting a refund, what to do with that refund. I really want to deal with that as well, and I'll dive into that. But when I talked about earlier, and I'll get back to verify and file. Actually, I pretty much covered it already. You want to make sure social security numbers are right. You want to make sure your address is correct, routing number, account number, all of that information on there is accurate, so you don't have any hiccups with getting what's due to you, or you accidentally put somebody else's social security number on there, and now you gotta, get everything taken care of and squared away. But I will tell you, especially business owners, entrepreneurs that have to write things off. For me, with real estate investing, I like to keep up with certain things. So sometimes you can use QuickBooks if you want to keep up with the flow of how the money is moving. That's one good thing that you can use for yourself is QuickBooks, and get with your CPA. That way you're updating things in the QuickBooks or whatever accounting technology, and they are at the same time. And some of your payments or transactions that happen are very repetitive, and they're the same amount every month or every other month, that honestly, as you continue to do it, and I think we're having some more technology issues with Facebook on this morning. So if you need to, go over to the YouTube channel, Coach Steele's Finance Training, if you need to jump on there. But there's some things, apps that you can use to keep up with different things. And I'm trying to see if I can pull up the mileage app for you as well. Let's see if it'll come up. So right here, you're going to see if you're trying to, let me increase the size of it. These are some of the apps that you can use to keep up with your mileage, whether it's Mile IQ, Everlance, Stride. You see some of these on here. I use Mile IQ, but use the one that best works for you. But those are just some of the apps you can use to keep up with your mileage. So you'll have another digital copy of your mileage when it comes to those taxes and things like that. So that's something else that you can use that I just wanted you all to be aware of. I do think Facebook was having a little issue there with technology. It may have gotten fixed now, but just keep that in mind. Don't struggle trying to keep up with all this stuff physically. And I know sometimes some of us that are older, we don't know about certain technology we can use. Get with your CPA and help them coach you, have them coach you on how to use that upgraded technology to keep up with all this stuff. Because as you get into business, entrepreneurship, and making more money, more tax laws and rules come into play. And you want to make sure that you're benefiting it on all that stuff to the best of your ability. So let's see. I'm going to go to number 8. And I'll still dive in briefly on what are you going to do with your refunds as well. Number 8 is always plan for the next year. Number 8 is plan for the next year. We always want to plan for the next year when it comes to our taxes. You should always be in preparation mode. You should always have your folders. You should always have your documents. Every month, every day, especially depending on what transactions you're doing, you want to be always planning for the next year, ladies and gentlemen. And so you want to verify, get everything taken care of, but then plan for the next year by repeating this whole process again. You know, some of you who have businesses, you may have gone out to eat and discussed business during those points in time where you've gone out to eat. Find out with your tax professional, are those events that I can use to write off as well? How can I use that event to put more money back into my pocket to save me money? So then maybe you might strategically plan when you go out to eat, not only to go out to eat to have a nice time, but to conduct business. What if there's a set amount of time or there's only up to a certain amount of money you're able to write off? So you can be strategic throughout the year to not only go enjoy yourself, enjoy life, but also use it to be able to write off. And so most importantly, guys, all of these things are important when it comes to preparing for taxes. We had a little technical difficulties this morning, so it kind of shook things up. So I appreciate y'all's patience on today. But when you do, if you do get some tax return money, what do you plan on doing with it? You know, what if you get $5,000 return? And this is mainly for the young people out there, or this may be for, you know, some parents. You got a few kids, maybe you're going to get a larger tax return. And so I want to show you some of the creative things you may decide or can do with those tax returns. Let's say you end up getting like $5,000 in return, but you don't need it to go towards any bills, expenses, or anything like that. You could use it to go on vacation, right? You could use it to go splurge or do something with, or of course you might put it in a high yield interest savings account, or which I've discussed earlier, you may decide to invest it. And so let's look at, you know, the hypothetical of if you decide to invest it in, let's say, the stock market. And of course, we know that the S&P 500, matter of fact, before we do that, we're going to look at initial investment, right? Let me make sure that you all are on track with me. Let's say you get 5,000, well, let's say 6,000 return. Let's say you get a $6,000 return and you decide to take 5,000 of it and you decide to invest in the S&P 500 or some type of retirement account. So let's put 5,000 in. So if you got 6,000 return, you invested 5,000, you took the other 1,000 and put it in your high yield interest savings account where you could make about 4% interest. Monthly contribution, let's say you didn't contribute anything else to it, but all you did was when it made dividends, interest, whatever, you just reinvested it. And let's say, some of you out here that are tuning in, let's say you're about 25 years old and you wanted to retire at 55. So you invest this money for 30 years. So I'm plugging in a 30 right there. All right, let's go deeper. Estimated interest rate, let's go, it makes 10% annually. All right, let's calculate and see that $5,000 that you got from your tax return that you put into the stock market, the S&P 500, 30 years later, that $5,000 is $87,247.01. Now, what's interesting is just from that one refund check, 30 years later, it's over $87,000, right? But now check this out, ladies and gentlemen. Watch this. That same 25-year-old, that same 30-year-old, this is where it gets very interesting, right? Let's say they decided to wait 5 more years. That 25-year-old, let's say they, instead of waiting till 55, they waited till they were 60. They put the $5,000 in there from the tax return. They didn't touch it for 35 years. It's making 10% interest. Dividends are being reinvested. Let's hit calculate. 30 years, $87,000. Look at this. That same $5,000, 5 more years later, almost doubles. It's $140,512.18. That, ladies and gentlemen, is the power of compound interest. And so a young person who is looking to be creative with their refund, if they get a refund, or you may not have a refund, you may just have an extra $5,000 or more sitting around, and you want to invest in 35 years instead of $87,000 in 30 years. In 35 years, that $5,000 can be $140,512.18. So that's just something to think about. Now, if you were to add money to that, if you started with $5,000 and you only put an extra $100 a month in there for your monthly contribution, let's see what we have then. Almost $500,000. All because some young person took $5,000 from a refund check that they didn't need, and instead of splurging it, they put it in the market. They got almost $500,000. And so some of you, you could be very creative with your investing. You may not be 25, you may not be 30, so you may not want to leave it there for 35 years. Some of you, whether you're in your 30s, you may be in your 40s, you may be in your 50s, but you can leave it there for 10 years, 15 years, 20 years. It still benefits you, and the power of compound interest will work in your favor. And so when I use that estimated 10% return, I'll show you why I did that. If you see right here, when we talk about investing it in the market, it says the S&P 500 annual returns historically average yearly return of 12.864%, assuming dividends are reinvested. Well, I didn't go off of 12, I just did 10%. So it could potentially be even more. So keep that in mind, that I guess in a sense, I may have been conservative with those numbers. So that $5,000 investment could be so much more. So I want you all to think about that when you get those refund checks, what you plan on doing with it. And so I appreciate y'all patience with Coach Steele's finance training today. We did have some technical difficulties and we had to restart and reboot and all that good stuff. But that comes with the territory of going live Saturday mornings, 9 a.m. Eastern Standard Time Zone. And so we've been doing that, and we're going to continue to do it, to have these conversations about financial literacy with us as a unit, with us as a team. And I appreciate each and every one of you. If you're tuning in, make sure you subscribe to the YouTube channel. We're getting ready to come to a close. I got some errands to run. I got some things to take care of on today. And I'm excited to have this conversation about taxes. We're going to continue to have this tax conversation probably over the next few Saturdays to figure out how we can best prep and prepare as best possible. I don't care if we talk about some stuff where I can save someone $10, $50, $100, or $5,000. If we can save you some money and provide value using this platform and coming together, then we have won. Whether it's this year or the following year, we got to get on board, put more money back in our pockets so that we can be financially successful, so that we can be financially healthy. That's what Coach Steele's finance training is for, to get everyone to a healthy place financially, to a safe place so that you can reach financial success and reach the goals that you're trying to reach. If you have a business, you definitely need to find out what write-offs you have. Anybody, you need to find out. But if you have a business, whether it's sole proprietorship, whether you have an LLC set up or not, you can still figure out what write-offs and benefits you have. So if you don't know, don't try to, spend so much time trying to figure everything out yourself. Get with a professional, someone that can help you and open your mind and your eyes up and get consistent, be able to log that stuff digitally throughout the year. I appreciate each and every person's patience. I think we covered everything on today. If you have a mortgage and it has a balance and you're interested in paying off your mortgage and being debt free, whether it's your mortgage and credit cards, personal loans, student loans, car notes, all of that, then you need to connect with me and I'll point you in the right direction and get you in a system that'll help you be debt free and pay off that mortgage balance. If you need a high yield interest savings account link to a reliable bank, FDIC insured, then you need to connect with me and I'll get you that information. If you're looking at increasing your passive income and creating an income snowball of money, then you need to get with me. If you're looking for one-on-one financial coaching, guess what? You need to get with me and I will do some one-on-one financial coaching with you. Of course, you can go to my website, www.steelefinanceacademy.com, and you can schedule an appointment with me. And of course, you do see my Gmail, coachsteelefinance@gmail.com. You can reach out to me there. I appreciate everyone for tuning in and participating on today. And you have a blessed Saturday. See you next Saturday, 9 a.m. Eastern Standard Time Zone.